Well, hello, folks out there in YouTube land. Got a big show lined up for you, and let's get right on into it. All right, let's pull up the screen. Palantir. Now, this is one I've been looking at for a few weeks now, and it's one actually I missed out on when it had that big run. And now that it's pulled way back, I've been taking a good, long, hard look at it. And let's get into Palantir. And we're going to answer the question, is it a long-term home run? Could be. All right, first of all, this market, we've been talking about it for months. It's been really creepy out there, but right now it's basically like this.
Please disperse. Nothing to see here, please.
Yeah, it's pretty much like that. It's just every day it's crazy. It like drops 1,000 points. The NASDAQ's down 3 or 4%, and it comes back up and it drops again. It's really been terrible. And it's really got a bad feel to it, but we're going to have some great opportunities here in the future to get some stocks at some great prices that long-term are going to make a lot of money. And the question is trying to find them. So this Palantir interests me quite a bit, and primarily because it's all about data mining, and it's got this software, and of course it's software as a service. That always interests me because it's such a high profit margin sector. But they basically send these forward deployed engineers, and they take their software and they tailor make it for the business that they're working on. And it really has become quite helpful for a lot of them. And it's a very sticky business model. It becomes quite lucrative for the company over time. So let's get into Palantir a little bit. All right, we're going to take a look at their third quarter. One of the things that I really like about this company is they've got a lot of money on their balance sheet, $2.3 billion with a B, and that looks really good. Here's the other thing that I really like about this company. It's this little sector right here. See that line? No debt. It's hard to find that. It's hard to find a company with over $2 billion in cash and no debt. So that right there, that's a major check mark. All right, the other part of this is if you look at their revenue, $392 million, $86 million in cost of the revenue, and $305 million in gross profit. So you can see there, that's like 78% profit margin, and that's pretty typical of software as a service. It's one of the reasons why this type of sector and company are so in demand, because they are so profitable. Now, this one is not making money yet. As you can see, it's still got losses, but it's cash flow positive. And what I mean by that, let's just pull that up. As you can see, you know, the net loss for the 9 months of $364 million, but look down here and you'll see stock-based compensation of $611 million. Now, stock-based compensation is not an actual cash expense. It's a non-cash expense, and it's treated as such. And basically that's founders taking a bunch of stock-based compensation, founders and top dogs going ahead and taking care of themselves, and they've been in this business from day one, so this is pretty typical. And over time, because they have done a lot of this, you'll probably see it slowing down, would be my guess. But it's really up to them. They're profitable if they want to be, anytime they want to be. Because if they said, oh, okay, we're just going to take $200 million in stock-based compensation over 9 months, they'd be $164 million to the good, and this is a very fast-growing company. And what I mean by that, as you can see here, the Q3 revenue grew by 36% to $392 million. So that's really strong year over year. And here you can see their commercial revenue, because they not only sell to the government and municipalities, but also they're getting into the commercial sector, and basically regular companies and large companies especially. And as you can see, their commercial revenue growth is 37% year over year, and it continues to grow, and they're just getting started on this. It says their commercial customer count grew by 46%. They've grown their commercial customer count 135% since December, which is really strong. And here you can see all the deals, 54 deals of at least 1 million, 33 were 5 million or more, and 18 was over 10 million. So these aren't small customers. And here you can see they've improved their adjusted free cash flow from 53 million down to 119 million positive. So they're definitely going in the right direction. Now, this company started out actually helping and working with governments. And like I say, now they're getting into the commercial part, but they started out trying to help with terrorism. And really it's got a history with Peter Thiel, who really started out with credit card fraud, and now they're trying to fight cybersecurity, but they're also trying to help a lot of these commercial companies like Airbus, for example. They help streamline their production facility to make the airplanes quicker and expedited them. And they work with BP, who helped them with their drilling data, and they saw a 10% increase in production, in oil production. So as you can imagine, for an oil company, that last 10% is almost all profit. So that's invaluable to them. Because if you think about an oil company, the first 10% of their production, that doesn't even cover anything. It's once they get up to a certain production level where it gets very profitable. Well, if you can add 10% to that, that's almost all profit. So it's huge. So as you can see, this can become a very sticky model. And that seems to be what's happening with this company. These commercial businesses are like, hey, this is great. This is working out fantastic. And they start spending more and more money with Palantir. Well, that's exactly what this is set up to do. And one of the things about this company is it stacks up really well with the other companies that are somewhat similar, with CrowdStrike, Cloudflare, and like Trade Desk. As you can see, their price to sales ratio is actually lower than all four of those. So that makes me feel more comfortable. And there's quite a bit of media out there talking highly about their revenue growth, and they're getting a lot of positive spin, especially since the pullback in the price. Now, as you can see with this chart, it actually has dropped well below support, and it's sitting down at like 13 bucks. So it's sitting at a pretty attractive price right now. Now, granted, if it weren't for this macro situation, I would be jumping all over this right now, but I'm definitely taking a good hard look at it, and I may be starting a position on it very soon. But if you go back and see, you know, there's not a whole lot of support below this $18, and it's well below that, so it's well below support. So I don't see it going down much further. You know, about the lowest I could see this thing going is maybe 10 bucks. And I know there's been a couple of reports out there of, oh, it's only worth $5. I don't see that at all. So like I say, I think that's a very interesting price and a good price to sales ratio, and well below a lot of its so-called competitors. I don't know if they necessarily really have a direct competitor. And one of the things about their CEO that's kind of important when you invest in a company, Alex Karp right here, and of course Peter Thiel is his partner there at Palantir, but Thiel's hair is kind of normal. But you know, a lot of the great CEOs, for some reason, have this crazy hair, and Alex definitely qualifies for that. Then you got Dorsey over here. You know, he's got the he's got the sort of strange locks. Of course, Zuckerberg over here, he's got the data hair, and then Steve Jobs, of course, kind of got it started as the great CEOs. With the wild 70s hair. So if you're going to invest in a company, make sure the CEO, if he has crazy hair, that really seems to help for some reason. And I almost was able to put Elon Musk in there, but his hair's just not crazy enough, which is unfortunate. Tesla would probably be worth an extra, I don't know, 200 or 300 billion if his hair was a little bit crazier. All right, folks, and that's Palantir today. Just wanted to get started on this stock. Like I say, I know it's a pretty popular one. I've never really covered it, and I was very interested in it, and I'm now covering it a little bit. If you like this coverage, be sure to hit that like button. Lets me know to continue to cover Palantir. And if you haven't subscribed, hit that subscribe button. I'd appreciate it. Give the channel a chance. And I hope you did like the content. And we'll see you next time on Mr. Frugal Investor.